and founder of Yellow Tunnel. And today we're going to have our weekly strategy roundtable discussion of current market conditions, geopolitical risk, what happened in Venezuela, what happened in Greenland last week, and earnings season, right? We're going to have Apple, Microsoft, Tesla announcing earnings this week, and then Amazon, Meta next week, and that will shape where the market is heading probably for the rest of the year, I would say, because there's just a lot of expectations about AI stocks and whether the current interest rate environment justifies the market evaluations, especially for large mega cap technology stocks. For those of you who are new, welcome. This is my brief bio. I do see some new names. Some have been here before. Alex, welcome back. My background is technology. So I have a master's degree in computer science, specializing in artificial intelligence, financial modeling. That's what I did in my undergrad and graduate school. Then started working at several fintech companies, UBS, Options Express. Started Options Express from day one through 2007. That's where I got most of my options experience in building analytics for retail investors. When the company went public, I decided I'm going to, manage my own money. Started Tradespoon, started Yellow Tunnel, working consulting in several fintech companies here in Chicago. So that's my background. I've been doing that for over 20 years, managing my own money and building technology. I have a team of great financial engineers that are building models, enhancing existing models to help me trade and to help our subscribers to trade. And about 2 years ago, Keith Harwood from Options Hotline joined us. And together we're doing live trading room every day. We're managing live trading room. His background is market making. He worked at several companies, I think doing, I believe it was VIX and Spiders and some individual stocks where he was a market maker, but also in hedge funds. So that's my background and Keith's background. Disclosures are very important. Please read them. Trading stock and options involve risk. I'm going to go through specific trade setups, trade ideas, to make sure that everything is clear. But some of these trades are live trades, so it's important to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm here to show you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into the economy of control, let's talk about current market conditions. So looking first then yield. So in the past 2 weeks, we had Venezuela and Greenland, right? Potential 10% increase on tariffs on European countries, and you can see that the interest rate spiked and broke above 420. It stayed below 420 since September, and now got as high as 430, which we haven't seen since August. And you can see, at least short term, the path of least resistance is higher highs, higher lows for interest rates. So we probably need to drop below 410 or 4.10, 415 to reverse this trend, 410. So for now, this is something I'm keeping an eye on. Even though we did pull back from the highs 430, but if we stay above 430 for a few days, maybe that's why Trump decided to back off of the tariffs, because the rates did jump to 430, and if he imposes 10% interest rate, additional 10% tariffs in European countries, we probably would see 4.5 handle. And that would be bad for the economy. So 10%, the 10-year yield is stable, but grinding higher, which is a concern for the market. What else? Value stocks continue its uptrend. It's been consolidating for the past couple of weeks, kind of not going anywhere. RSP, VTV, same price pattern. QQQ has been underperforming market, kind of working in this ascending wedge, right? Ascending triangle. And you can see we are retesting all-time high again. We broke out of the, at least for 1 day, from the December highs and January highs, and we are on its way to retest November highs, all-time highs. As we are approaching the earnings from Tesla, Microsoft, and Apple. Small caps are also broadening of the rally. You can see small caps continue to grind higher. It pulled back in the past 3 days, but still, grinding higher, staying above 20-day moving average. So you do have a broadening of participation. And what else is interesting? Bitcoin continues to outperform. Bitcoin, still trading in December, January lows in a strong downtrend, which is another area of concern. And then silver continues to grind higher, right? Strong performance in silver, kind of a vertical move to the upside, and continue to trade higher. Copper pullback as well, and crude oil also continues to grind higher. And the other beneficiary of the trade away from the United States, everything but United States, right? So one is stronger dollar, one is again, uncertainty about geopolitical risk and US policies, and you can see emerging market kind of in a vertical move to the upside continues to grind higher. I don't think it's at all-time high. Actually, it is. Okay, so we're just recovered all of the losses from the last recession, 21, and now on its way to continue to go higher. Actually, it finally broke 2008 level. Okay, so before the great financial crisis. Not great, global financial crisis. All right, so that's one of the beneficiary of the weaker dollar. Right, and dollar did pull back, interest rate went up, dollar pulled back, and actually taking out the support, right? We're taking out the support of 96 and making marginal new lows. If we push lower, dollar pushes low, then again, I think emerging market is going to continue going higher, and and United States is going to have a hard time breaking through the 7,000 level. And right now we are retesting 7,000. So a lot of positioning at 7,000. We talked about, if you've been part of these webinars, we talk about 7,000. I think we made marginal new highs, 69.88, but still, the largest position, if you look at the positioning data for SPX, then you can see clearly that a lot of people are selling calls. Not people, institutions, selling 7,000 strike. Right, and this is not all expiration months, still all. So the flip point is at 6,900. That means that bulls are in control, right? We're in green as long as we're trading. I would say 68.80, 68.50, as long as we're above that positive gamma, net gamma, positive net gamma. Bulls are in control and supported for the market, but you can clearly see 7,000. Almost $80 billion worth of positioning at 7,000 levels. So something really positive has to happen in the market for it to break above 7,000. And as we reach 7,000, this is where you want to consider maybe raising cash, maybe adding hedge. I raised cash today. I trimmed my Amazon position. Right? If you look at Dynamic Power Trader, and you look at today's orders, so you can see I trimmed Cisco position, Cisco stock position, I trimmed Amazon position, I closed TJX, and I'm trying to close the Halliburton. So trimming positions as we approach in 7,000. I also have a hedge in Dynamic Power Trader. If you look at the positions and you look at the hedge, still holding QQQ hedge to protect the JetQ position, Cisco position, Amazon position, because of the uncertainty about the earnings season and the fact that 7,000 is a major overhead resistance. So trading is about risk management, right? You have to have a solid trading plan. You have to have a journal, continue to journal. I mean, we put some key elements of trading plan, such as 4 active positions at a time and not risk more than 2.5% of account value per position. There's a lot of videos on that subject, which you can also look, review. This is all part of the free subscription. You don't even have to pay. So market plan, trading plus discipline, trade analysis. But more importantly, if you are looking for, if you don't have a trading plan, you know, I strongly encourage you to have a trading plan in writing. Treat trading as a business, right? Where you have clearly defined goals, easily achievable goals, more or less mechanical trading. And we can help you with that by, if you go here and schedule consultation with Keith, who is, you know, has a lot of experience on professional side, where he was a market maker and hedge fund manager, but also on education side, he's been doing this, I think he said over 10 years now, close to 7-10 years, long time. So schedule an appointment, talk to Keith, and, you know, 25 minutes, it's free consultation, and then you guys can decide whether you need help with trading plan or strategies or risk management or setting reasonable goals or any other issues that you have. So I encourage you to try to do that by visiting this link. I would say that's probably something that's available to everybody, and hopefully you guys can take advantage of that. Any questions? No, I cannot type this. Sorry, 1 second. Okay. All right, perfect. So part of the trading plan, you want to let's look at the February, March, right? So end of the earnings season, end of February, most companies will in the next couple of weeks will announce earnings, so have clear picture about the earnings. Still geopolitical risks, but this is an exercise where if you want to become a mechanical trader, disciplined trader, it doesn't matter what the time frame you're looking for. In this case, I'm looking at February expiration and March expiration. Right? What's going to happen by end of March? Right? What are the possible scenarios? You want to go through these scenarios. If you don't care about end of March, you care about end of today, end of tomorrow, same thing. You can look at the expiration days and, you know, based on 0 days till expiration options, determine what the range is going to be today, tomorrow, Friday. And so right now, most people trade kind of a longer term options, even though 0 days till expiration is very popular now. And you can see that one scenario we break above 7,000, right? We break above 1,000, get to 7,200, right? We're approaching the earnings season of mega cap technology stocks. We have a broadening of participation, small caps, mid caps, emerging market. Technology has been lagging. Now we're at all-time high. If the earnings justifies the evaluation, then we could get at one, right? 7,100, 7,200. Scenario 2, maybe a false breakout where we get to 7,100 and then drop back. So scenario number 2. Right, somewhere in here, right? And scenario number 2, we either retest October, November lows around 65.50, or we're going lower, right? Maybe uptick in unemployment, maybe we do impose additional 10% on Europe, or 100% on Canada, or 300% on China, something along those lines. And then we have scenario number 3, right? Signs of recession, signs of that interest rates continue going higher because the concern of hyperinflation. And plus, don't forget, we are in midterm elections year, and usually most constituents make up their mind by May, June. So there's other policies that current government can issue in terms of deregulation of banks, or additional taxes, or dividend check to all the people, something like that, right? They can also stimulate the economy. So how come you say, and why do you need this exercise? Because trading, it's a distribution of possible outcomes. You never know with 100% certainty it'll be 7,200. You never know with 100% certainty it'll be 65.50. But going back to statistics class, you can say, okay, 70% of the time we should be trading between 6,700 and 7,100 between now and end of March. And then as you're approaching closer to 7,000, 7,100, okay, maybe time to raise cash. If we dip below 6,800, 6,750, okay, maybe you want to deploy some of that cash. So how many of you say one, scenario number one? We're going higher, right? Microsoft, if you look at the charts of Apple, Microsoft, they're kind of rebounding from the oversold conditions, and AI is here. It's going to change our life and improve efficiencies and productivity and revenue for all the companies that are involved, whether it's utilities, industrials, technology. So we're heading higher. Scenario number one. Scenario number two. Nobody's raising interest rates. Interest rates are elevated compared to the recent history, recent few, at least months. I'm talking about in the last few months. And if inflation continues, or if rates continue to grind higher, 4.3, 4.4, 4.5, okay, we're trading in the range. Maybe shallow pullbacks, maybe it's not going to be 10%, but 5-10% pullback. And we're trading in this range. And scenario number three, signs of recession, and we're going lower. New Fed chair, right? We do have new Fed chair in May. The consensus that tomorrow we have a Fed meeting tomorrow, and the consensus is that there's no change in policy. They're going to hold the rates constant, and a lot of people, most people argue that there will be. Most economists argue that there will not be any rate cuts until the new chair comes in May, right? 1, 2. Alex, BJ, thank you. Amish, what do you guys think? John, Dr. Simon. I'm gonna go with BJ. And 2. I think scenario number 2, market is overbought, like value stocks, small cap stocks overbought. Technology stocks are catching up, and I think if the rates continue to go higher, like they have been, since end of November, December, I think then we will be stuck at least for Q1 in this range too. Probably break 7,000. All you need is good earnings from Apple, Microsoft, and Tesla, and we're above 7,000. But probably going to be a false breakout, right? So end of February, maybe end of January, we kind of do something like that. Right, one step forward, 2 steps backwards, or 2 steps forward, 1 step backwards. We'll see, right? So, but I would, at least until this level is cleared, you clearly want to consider raising cash, right? So how do we help you on Yellow Tunnel? You can see Dynamic Power Trader, right? So you can sign up for Dynamic Power Trader. We have a live trading room every morning. We give you some guidelines in terms of how much risk to take. There's guidelines, right? How to trade, our trading plan, our guidelines, short-term trading plan. You can find them all under helpful guides, video, right? Kind of a 10-minute overview of our services and how to use them. You can also use that. And in terms of, is it the same T-shirt? No, different T-shirt. Okay, and then you can see all of my orders, all of my positions, right? So that's Dynamic Power Trader. Amazon, Cisco, some of the other positions, and you can see the model is doing a good job predicting, the stocks. This is portfolio management, Dynamic Power Trader. If you have your own trading plan, you're a repetitive, you're a confident, disciplined trader, you have a solid trading plan, which we have a lot of users like that. Scottish decision again, large windfall from refunds. Okay, yeah, so I mean, yeah, Scottish decision, Supreme Court decision on whether tariffs are legal or not. Some of the executive power that Trump is using. So that also could definitely influences the market. So Alex, thank you for pointing that for sure. So this is an example of aggressive power trader where you get signals every day, right? Each day meant for short-term aggressive traders that have their own trading plan. And usually you hold the position 1 or 2 days. Sometimes I hold it a week, right? So today, let's say CTVA, right? I never seen this signal, but the model picked it up, right? It's S&P 500 stock. And you can see agricultural commodities in general are grinding higher, whether it's CTVA or Schlumberger, right? Or just metals and miners in general, or materials in general, you do see a strong uptrend. So every day you have a model and gives you a signal. CTVA is one, Live Nation is the other one. Philip Morris going into the earnings. Consumer staples have been doing well, right? We're going into earnings of Philip Morris. That continues to grind higher. Model picked it up. And you can see in general, consumer staples are strong 26. They're kind of recovering most of the losses from 25. Sorry, so that's aggressive power trader. Model runs every day, gives you the signals. You can, again, if you have your own stuff, let's say NVIDIA, right? You want to know, well, NVIDIA doesn't have a signal, but what does the model think about NVIDIA? It shows uptrend in NVIDIA, that right after the earnings, the path of least resistance is to go higher for NVIDIA. Obviously, earnings can change that, but at least as of right now, that's what the model thinks. And for short term, you want to consider buying at 183, at 187. Now it's at 189. A little bit too far ahead. Maybe you want to trim it, right? Because we don't see a breakout until next 30 days. So you might want to consider trimming, your NVIDIA position going into the earnings season as well. Right? So that's aggressive power trader. You can watch the recordings, live trading recordings from Keith and I. You can look at the active investor workshop if you want to learn about portfolio construction, options, technical indicators, fundamental analysis. You have how many years? 12 years worth of workshops. So definitely a big archive that's also available to you. You can enter a phone number to get SMS messages. So that's dynamic power, aggressive power trader. Weekly power trader. Weekly power trader, the model runs every week, right, on Sunday, right? Keith and I look at the results and basically suggest different stocks to trade, right? So you have CBOE down, you have Clorox, CVS is down big today on the earnings from UNH, and then some of the industrials names. So this list gets updated every week, right? You can also trade stock or options using our signals, and again, our same AI analysis, history, and recording. We talked about dynamic power trader, where I trade stock and options. This is actual not only signals, but my actually live positions. And you can also look at the earnings power trader. So earnings power trader, I did JP Morgan, I did General Electric. This week, we have Apple, Microsoft, and Meta. So let's see, let's do Apple. It's $260 stock, it's easier. So Apple, so how you would approach, if you have a position in Apple right now, right, below 50, below 20-day, recovering into the earnings, announcing earnings on Thursday, right? So you can look at earnings power trader. It actually shows uptrend. So long-term, the model sees that Apple is still in uptrend. The long-term trend gets updated on the 1st of every month. So on January 1st, it still sees an uptrend. And, actually since January, I mean, it did pull back, but now kind of recovering. So if you look at the supply and demand for options data in Apple, same thing, you can look at monthly expiration, or you can just say, Vlad, earnings are on January 29 on Thursday after the close. So all I care about January 30 and February 2nd expiration. And then you can see based on supply and demand, market expects about 4% move, 3.5%, 4% move in Apple. That's what it's been in the past. You can see large positioning at 250 strike. So on the downside, could be a $250 stock. On the upside, 272.5 is where there are a lot of positioning. If you look at the historical move, now you can look at the historical move, and you can look at also sentiment put and call ratio. So historically, in the past 4 quarters, it's kind of mixed reaction. It's been down 3 or 4%, it's been up close to 1%. So average move is about 2%. market expects 4% move to the upside, to the downside, showing basically, again, 250, that strike prices at 250, where you see probably the largest positions outside of where it's trading 250, right? If I go to Vanguard, actually type in Apple, sorry, option chain, Apple. All right, so let's look at January, right? January 30th, end of the month expiration, and you can see highest open interest is 250, right? So highest position of open interest is 250. So you know that if there's any issues with Apple earnings in terms of their how many iPhones they're selling, what they're positioning in the AI, are they using their own models, are they using some other models, will Siri get better or not? So you can see that any negative news and market will, bulls and bears will fight, has to fight it off at 250 strike. And you can see also significantly higher volume. So that information basically tells you that if you want to sell premium, if you don't think Apple is going to drop below 250, right? Basically say this is the low, right? October lows, we're not gaining much further than 250. You sell a put spread, right? You sell a put spread because it shows you that there is a pretty large open interest at 250, the highest open interest for the out of the money puts. And then you can look at and also that we haven't really moved more than 4% in the past 4 quarters. And then put and call ratio, right? You can look at the put and call ratio and just see what other people think. Right now, almost 2 to 1, right? That you have call buying, then demand for the calls, then demand for the puts. Usually means there's a bullish bias that the majority of the people feel good about Apple, right? That they're not behind the AI race, and their operating system of iPhones and Macs is going to keep them, in good position. And then you have almost same thing in February expiration and same thing in March, right? 2 to 1. So very bullish price action. Obviously, that doesn't guarantee that Apple is going to go higher, but it does suggest that majority of the people are bullish, and maybe there's little room to the downside. Not little, but 245 to 50, maybe $10, $15 to the downside. But you have, all-time highs around 300, and there's a $40 to the upside. So one might look at that and say, okay, I'm going to sell the put spread. Then the question, do you want to sell the call spread? Do you want to go with the crowd or against the sentiment? If you believe that Apple is here to stay and this is wave, 3, wave 4, there's wave 5 coming, okay, then you might want to buy calls, right? So that would be the idea, right? Buy call spread, sell put spread, because Apple is going to be, at least retest 270 strike, right? So by looking at the expected move, historical move, and implied move, by looking at the sentiment, how people are positioned, and looking at where the highest open interest is, right? Then you can say, okay, maybe selling. If I sell 250 strike right now and buy 247.5, I can collect 40 cents. Right, so I can sell a put spread, sell a call spread, collect 80 cents if I'm neutral, or I can sell 40 cents, and maybe if I do think that people are gravitating toward 267, 270, I can turn around and basically say, okay, I'm going to buy 270 and sell 272.5. So this way, basically flat. You're not spending any money, right? As long as it's trading above 250, right, or then you're making money, or you're not losing money, right? And you're going to start making money if we do get to 270 level, right? If we are able to jump to 50-day moving average after the earnings, then this would be a profitable trade. If you're concerned if it's going to happen by January 30th, okay, then you can go to, next week expiration and do the same trade, right? You can sell to 50, buy to 45, and then buy to 70, sell to 75. All right, so using credit from the put spread to finance your debit call spread, and also you're not paying anything, right? So same idea. So as long you have till next week, not this week, but till Friday for Apple to hit 270, right? And as long as that's the case, then you will make money. Any questions? All right, 1234, we talked about earnings power trader. Again, I don't trade all the earnings, but one of these I will trade. So you can see my orders and positions here. And then in Profit Accelerator, this is where I only trade stocks. So again, Amazon, Cisco, Halliburton, JetQ. Any questions? All right, then are there any questions? So if there are no questions, I encourage you to schedule an appointment with Keith. We have a 25-minute, 15-minute conversation that will help you with trading plan. We do have a lot of free content, trend analysis of webinars. We have blog every Monday. Every Sunday, I send a blog with the trade ideas. So please add info@yellowtunnel.com, info@yellowtunnel.com, so you get our emails in your inbox. That's very important, right? You want to whitelist them. And you get every Sunday, there's a blog. And then every Tuesday, there's a webinar with a recording. And then there's a different archives of our webinars that you can find here. Any questions? Right, Alex, Amish, BJ, JT, John, Mike, Dr. Simon. Some of you joined a little bit later. Let's just recap. So the most important, obviously, Apple earnings, right? So where is the earnings, right? So earnings, Apple, Microsoft, and Tesla, then Amazon and Meta is going to set the stage. And as I said, not just maybe for end of January, end of February, I think for the rest of the year. Because right now we spend a lot of time trying to break through this overhead resistance of SPX at 7,000. Right? Billions of dollars of institutional money are positioned at this 7,000 strike, right? Across all the expiration months. So if we can, usually there's a saying that where January goes, the rest of the year goes. So if January or February, right, or early February, we can get above 7,000, right, and earnings do not justify getting above 7,000, with all the geopolitical risks and uncertainty that can flare up at any point, I would consider raising cash, because the path of least resistance will probably be retracing back. I mean, as of right now, it could be, I anticipate a shallow pullbacks, maybe, 5%, 3%, but based on the news, it could be more, right? It could be more. So for now, we're pretty well positioned by February. So I guess I don't anticipate big drop by February expiration months, but starting February, if we're not above 7,000, right? And February expiration is February 20th, right? And then people are going to reposition, then you could see a bigger pullback if we're not trading above 7,000, right? So this 7,000 is an extremely important level, and we're trading right at that level, 69.80. And interest rate, right? Right now, as long as interest rates are heading higher, I don't think market can go much further, right? If we jump above 4.3, I think market is going to be in trouble. 4.4, 4.5, this is where the market pullback is going to accelerate. So the interest rate has to go lower, and I'm not sure which macroeconomic data will push the interest rates lower, right? I mean, CPI inflation data heading in the right direction. Economy is stable, GDP is expanding, people have jobs, so we'll see. All right, guys, that's all I have for today. I appreciate you joining. We have more people joining. Okay, Chandu, I know you joined a little bit later. Mike, TY. All right, for those of you who joined later, and I know you guys are new, we went over, so I'll try to do it in a couple minutes. We went over the yield, 10% yield, which is important. That's the area of concern. SPX facing 7,000 level, all-time high, but nonetheless facing a big overhead resistance. I would consider raising cash. QQQ is also retesting all-time high. If earnings from Microsoft and Apple actually, and you can see people are positioned very extremely bullish, right? January 30, almost 2-to-1 expectation, 2-to-1 expectation in February expiration, 2-to-1 expectation in February expiration. So majority of the people, and March expiration, majority of the people are bullish, and they think that if Apple and, let's see, is Microsoft same position? It's probably. Let's see if they're all the same. Tesla, sorry, Microsoft. Yeah, Microsoft 2-to-1, 2-to-1 in February. So bullish. Most people think that we will take out the overhead resistance and continue to go higher. So that would be this in the next 2 weeks. If we're trading about 7,000 and Apple is up, Microsoft is up, Google is up, then we're heading higher. If the earnings are disappointing or not enough to get above 7,000, then you would have a pullback, at least revisiting again, January lows, or depending on the news, or December lows or November lows, right? Those are the 3 levels to watch as we head into the earnings season. In terms of some of the services, just quickly, aggressive power trader, you get trade idea every day. These are meant to be short-term signals for somebody who has a trading plan, right, and knows how to trade these short-term signals, right? So you have a history of these signals. They get posted every day. You can see orders positions if I have them. You can watch the recordings from live trading room, how we use these signals. And you have AI analysis where you can type any signal and trade them. The weekly power trader, similar service, but longer term view, right? This gets posted every Sunday, analyzes more data, and you can hold position for a couple of weeks, maybe a month, but these are longer term signals. Dynamic power trade is actually what I trade, so you can see all of my orders and positions. Today I trimmed Amazon, and I trimmed Cisco going into the earnings, right, to take a little bit less risk. All right, if there are no other questions, then that's all I have for today. Thank you very much and have a great day. Thank you for joining, everybody who's new. And also I did put, if you guys want to learn more or you need help with trading plan, you need to help with risk management and become a disciplined trader, then you're in the right place. I would schedule a meeting with Keith Harwood. His background is market making. He's expert in options. He worked for hedge funds. He managed portfolios for institutions. And he joined Yellow Tunnel 2 years ago, and he does live trading room. We have paid service that he manages, and he manages our training and education. So I encourage you to set up an appointment and talk to Keith as well. All right, that's all I have for today. Thank you very much and have a great day. Alex, thank you. I appreciate kind feedback. Alex, Amish, Vijay, Chandu, Ed, JT, John, Mike, Dr. Simon, thank you very much.